Is the biggest week of earnings, with half of the Dow and a third of the S&P set to report. Starts today with Pfizer, Harley-Davidson, Apple, and Starbucks, just to name a few of the big names that are going to be reporting. Joining us right now for a look at what investors can expect is Paul Hickey. He's co-founder of Bespoke Investment Group. And Paul, it's great to see you.
Good to be here.
So we were waiting for this earnings season very eagerly, figuring this was going to tell us if we were really kind of pulling the world out of some potential slowdown, if things were going to look better and brighter. You've got this coronavirus that's kind of hanging over things right now. What are you looking for in the earnings, and can that overwhelm what people are worried about when it comes to this virus?
Well, so the coronavirus is going to be a distraction from earnings season here. Coming into earnings season this quarter, we've seen a bit of an improved sentiment picture on the part of analysts. We've seen prior quarters, we've seen a preponderance of negative revisions to earnings heading into earnings season. This quarter, we've seen it's almost evenly split, but there's still more negative revisions than positive revisions going into earnings season. And what our historical studies have shown us is that when you have that low bar set for earnings season, you have more negative revisions. Earnings season tends to see positive returns, whereas the opposite, one perfect case and example is coming into the Q4 earnings period in 2018, we saw massive positive revisions versus negative revisions, and that was when we saw the market correct in late January. So it definitely does tend to impact performance during the earnings season here. And what we're looking for now that we started to see companies report, is stock price reactions. How are the stocks reaction? That's the ultimate arbiter of how the reports are, whether they beat or miss, or it's how the stocks react. And we've tended to see average gain of about 0.5% for all companies reporting, but the companies that have exceeded EPS forecasts are going up less than they typically do for this quarter, whereas the companies that miss are going down a little less. So it's more of a muted reaction right now we're seeing, and I think that's because of the distraction we're seeing from people are focusing on other things right now.
It's not just coronavirus that people are focused on. My guess is that investors will be much more focused on what they're hearing in terms of the outlook from these companies, because we had so many other things that changed. You just had the China trade deal that was signed, and so it's still too new to kind of figure out what changes that may hold in store. And I think investors just want to know, what does this mean for the next 6 months?
That's a great point. And Harley-Davidson reporting today, since the trade war rhetoric started heating up, no company has mentioned tariffs in their conference calls more often than Harley-Davidson. So this conference call today, it'll be good to see how that company, the discussion of tariffs is involved in their discussion, and how they impact things going forward in Europe and in Asia. Interestingly enough, though, the company, its Q4 earnings reports have historically been the weakest for the stock. While it's risen an average of 80% of the times in reaction to its Q1, 2, and 3 reports, it's risen less than half the time in reaction to its Q4 reports.
The stock has not been performing well over the last month or so, as you might have anticipated, with the news of the China trade deal coming through. So it's not like it's been trading up into this earnings.
Right. So it's also been impacted on Europe, issues with trade in Europe, too. So that's
and those look even more.
And that's still in flux at this point. Right. So I think the key for Harley-Davidson, too, is you have to realize it's been a declining business for the last 5 years. And whereas it used to be a luxury brand, command a luxury premium, now they're trying to move into more utility aspects, where motorcycles are more of a need than a luxury in areas, and that hurts margins. And you've seen the multiple that the stock trades at relative to a company like Ford compress over the years. And I think there's a lot fewer people getting Harley tattoos now than there were 10 years ago. And that used to be the big boost for the stock. If people are getting a tattoo of a company on them, it's a good thing, but not anymore. They're not doing it.